Hey everybody, welcome back to the channel. So today I want to take a quick look around trading news, and today specifically around the Bank of England interest rate hike, which could potentially have a significant impact on GBP. So I like to trade GBP USD, cable as it's commonly known, and often when we get these news announcements coming out, especially with the high volatility, if we look on Forex Factory, we can see that with the potential today for an interest rate hike from 0.25% up to 0.5%, we could see a significant increase in the value of the pound. So typically when banks raise the interest rate, that is normally a signal that the currency is going to get some strength, and therefore the value of that underlying asset will go up considerably. Now what we're seeing at the moment is a huge rise in inflation. That's down to many factors. We're seeing heating prices going up, we're seeing oil go up. It has a knock-on effect to the rest of our goods we buy, whether it's through transportation costs or raw materials. So all those things, the prices are going up, and one of the factors the bank have at their disposal is to raise interest rates. Now, as traders, we know the common saying is obviously buy the rumour, sell the news. So what we'd expect is prices to start to increase in the lead up to these news announcements. You start to see buyers come into the market, start buying up GBP USD. That could be from large institutions or a significant number of retail traders. But again, the banks are the ones who have the real buying power in monetary and fiscal policies. And so at that point, we start to see the price rally up. But looking at the charts, we're not seeing that at the moment. Now, it could be that there has been a significant rise in GBP over the past couple of weeks. That's also down to the fact that the dollar has lost some of its strength. If we look on the charts, we can see that correlation. So here we can see a chart of GBP USD, and it's obviously fallen off significantly from the high which had mid-January, and from the low it has actually increased. If we do a quick measurement on this, it's increased about 1.3 to 1.4% from the low. Now if we look at the euro dollar, that's actually done pretty much the same. It's tracked along sideways, had a nice increase, came all the way down, and again has increased by, let's just measure that, that has also increased by 1.4%. But again, looking against where the dollar index is, we can see that's actually given almost a very similar, almost to the euro, but inversed, and we can see that the price has come off from the high this month down to now 1.3%. So what we're seeing in the majority of the USD pairs is they're actually following exact same correlation. But if we go slightly back on pound, where there was very much a sideways movement on the actual dollar index, pound was actually going up. Now obviously that was prior to the news announcement last month, obviously it has significantly gone up as well. So this is where we could have seen a lot of the pre-buying of this interest rate announcement coming in. So it's really interesting to see those correlations between the dollar index, the euro, the GBP, and just to see if there's actually any signs of more buyers over the past week or so coming into the market and pushing, let's say, the pounds higher than it would have expected to be. Now, I haven't seen that by just that sort of 1.4, 1.3% movement, which exactly correlates to the dollar index. So how do we actually trade this one? Are we just going to make an assumption and buy it on the fact that if interest rates do come out and they are an increase of 0.5% and the pound goes up, do we take that as a buy? Or on the assumption that that's already baked into the price, and if it doesn't get announced and it stays at 0.25%, then the price will retract and there'll be a big sell-off in the pound. So the way in which we can do that is if we start looking at the lower time frames of the day, we can see that the actual volume momentum isn't there. It's very tight range on the pound, almost sort of up and down between 10 pips, almost nothing for what we'd expect that sort of currency pair to trade. So we could theoretically wait to just before the news announcement comes out and place a buy and a sell order above the range of the previous hour, just an example. Now whatever the announcement does or the momentum comes in, we can get triggered into one or potentially both those trades and take out for a profit. Now personally, I wouldn't do that, purely because of the unknowns around it. We'll see that News can come out and it could literally just spike one way. It may not hit our take profit, and it could literally reverse within minutes and go all the way down the other way. It's so unpredictable. My preference on trading the news is just to stay out of the markets, protect that capital, don't risk it, because there's always going to be another day and another opportunity. So about 1 or 2 minutes away from the actual interest rate announcement now from Bank of England, and we can see prices almost respected the channel it was in from the start of the morning with a few breakouts. And we see in the past 10 minutes we've seen price increase and starting to push higher. Whether that's now people are going to literally come in at that point now just sell, depends on what the announcement is, and literally just waiting for that to come through any minute now. So put a couple of zones on the chart, sort of about 50 pips away from the current sort of breakout ranges we're likely to go to, and that's where I'd expect price to go if it was to break long or break short. Let's see if it's going to hit those targets. So there we have it, news is out and massive spike higher in the actual value of the pound. And that's obviously what we probably would have expected. If interest rates come out and they're higher, price would dramatically surge up. And we've seen that literally 50, 60 pips within a matter of minutes. Now you can imagine if you're in a buy position right now, the actual huge profits that could have actually come out because of that. But I've said these are very, very unpredictable, volatile times. With the announcement knowing that it could have gone higher, the price could have already been baked in. That probably wasn't there based on the correlation between the US dollar index and the British pound. And we're seeing now a massive surge up way into the 100 pips and now obviously starting to fall off. Who knows what's going to happen? It's an instant reaction to the news. It could be that now people start to look at the long-term economic forecast of that. It could be that the price starts to consolidate and come back down. Time will only tell, but obviously this is why I tend to stay out of the news, because it's just too unpredictable. Yes, there could have been people buying this and made significant amounts of money. That's not my trading style. I prefer to get into a trend, just follow that along and not look for these volatile moves around news. But it's definitely going to be interesting to see how the day pans out, whether it's able to sustain that growth, especially when the US opens in a couple of hours, or as I say, people start to sell the news and price starts to retrace all the way back down to where it started from. That's the interesting thing of watching these news announcements and seeing how it reacts to the markets. And just taking a quick look at euro dollar, we can see that this is purely based on the pound. It's had no impact on any other currencies. They are just flat from what they were at the start of this morning. And yeah, it just goes to show the power of news events and getting on the right side of it. So I really hope you've enjoyed today's video. Leave a comment down below if you are a news trader and really enjoy that volatility when things come out, or if you're like me, want to stay away and just sit on the sidelines and watch and react later, see what happens. So as always, thanks for watching, and I'll see you again soon. Cheers.